Welcome, everybody. This is Market Peak with Seth and Matt, P-E-E-K, and today is Wednesday, February 24th, and we're coming out with a, off-release episode because GameStop seems to be exploding once again, and you actually pulled over so we could get this one, recorded and out pretty quickly. But first I want to tell you, subscribe and like. All the way over there is the subscribe button. Somewhere down there is the like button. We'd really appreciate it. We are not financial advisors. This is not advice. Definitely consult your professionals. We just like some of these stocks. That's all. So we're going to go ahead and start with my portfolio here. Those of you who watched yesterday's episode, you saw this number was down around 7,000. So I actually got a little bit lucky. I left a little bit of money in my Robinhood account because I had some calls here. But I got kind of lucky. Once again, I jumped in GameStop at around $70 earlier today and managed to turn my $2,500 investment into what is currently valued at $6,000. So a lot of chatter has been going on. If we actually look at the day chart, actually, this is the 5-day. There you go. So if we actually look at the day chart, it was kind of steadily just humming along. It's like 44, 45. And there's a Wall Street Bets has a thread that's specifically for GameStop. And all of a sudden the chatter hit. And as you can see, it pretty much exploded. So it's, sell, buy. And actually trading actually halted twice. So it was one of those situations where everyone's buying like crazy. Around like $72, it stopped for maybe like 5-10 minutes, got released again. And then interestingly enough, the last like 15-20 minutes of the day, it was pretty much halted altogether. And, of course, so the last 15 minutes, nobody could buy it at all. And then once 4 o'clock hit, you could only get it in post market. So pretty interesting day, man.
Crazy.
Yeah, and if we look at the chart, you can see there's a bit of a sell-off after the whole situation, after the lockdown, I guess, got released, and then it slowly climbed its way back up. If you kind of take a look at what happened with GameStop, this is actually back in January. So similar situation, nice climb right here. And then 4:30, you get your after hours trading, yada, yada, yada. And then 9:30 in the morning, big jump. Up and down, and then dipped once again in after hours, and then another big jump right here on the 28th. And then that was the day when it just got, people stopped being able to trade it. So I guess the question is, do you feel as if, there's no way Robinhood and Webull and all that can do this again, can they? Do you think?
They want to get it under control. If price action becomes a little too volatile, there's incentive to kind of, better manage the order book.
Sure.
But who knows? There could be something more nefarious going on. I find it interesting that this much time has passed since the last big squeeze higher.
Sure.
Which makes me think that some market players were well positioned this time.
Yeah. I would think so.
Because I'm guessing what CNBC is saying right now is that the C-suite shakeup is what precipitated this big move higher. But let's be honest, there's still a lot of short interest in the stock.
Sure, that's for sure. And that's what a lot of people have been talking about.
Positions are going to continue to unwind.
Yeah. Well, people are already saying, here comes the short squeeze. And like, well, it might be a little bit early for that. But I just feel like this time around, what really stopped the momentum was them halting trading on Robinhood and Webull and a lot of the other ones, and even on TD Ameritrade. Fidelity, they didn't, which is why I actually opened a brokerage account over there just for situations like this in case stuff gets crazy and they do stop trading. But if not, even if they do, based on historical data, which is only last month, almost a month to the day, we still got a couple more days before this thing really starts to, look at possibly taking a dip. Because here's what's going to happen. International markets are going to see what's going on. A lot of people from other countries are going to see, what's going on. I feel like it's going to definitely open up big. But once again, if we go back here and we look at actually what happened, is it this one? Yeah. So every time you see about 9:30, there's a little bit of a dip. Same thing here, 9:30, big dip. Same thing here, 9 o'clock, 9:30, big dip. So the best thing, I don't know. I feel like what I should do, and then you can tell me what you think the best strategy is, because once again, my $2,500 is now 6,000. I feel like tomorrow could be worth a little bit more in the beginning. I plan to sell it all and then maybe wait for a dip, buy a little bit more, maybe buy a put depending on where it is, maybe buy a call depending on where it is. I know it's really expensive right now because of volatility. So what do you think the play would be tomorrow for me?
So I don't know what we're up after market, but if
that's a good question.
we
Right
come out
now,
the gate tomorrow.
So yeah, we're now actually we're at 168
So
bucks.
what was the increase after market at after hours?
After hours, we're at 83%. 83% after hours.
83%.
103.
If you're up 83% out the gate tomorrow, just sell.
Yeah.
And look at market leading indicators. Look at the IWM, which is a small cap proxy. That's pretty telling about which direction the market is likely to trade in the coming days. Look at the IYT, the transports. Again, they tend to be another risk-on trade. So if you see people pulling out of that, you see people pulling out of the IWM. Even if the NASDAQ and the S&P are up, that probably means there's some rotation and we're moving towards a more risk-off kind of sentiment. It doesn't have to be anything dramatic, but that's what I tend to do.
Last time this happened, I mean, the VIX went up.
There's a lot of things holistically.
Sure. There's a lot of stuff going on. That's for sure.
Yeah,
absolutely.
Yeah. But you also want to like pay attention to what the mainstream media is saying. If they're pulling you in one direction, say CNBC is talking about tomorrow when you wake up a GME massive dip, Jim Cramer's telling you to sell.
Sure.
I tend to be skeptical of an entire media outlet kind of pushing the same story very aggressively.
It's just not going to work, though. I mean, too many people see what's going on. So many people, and you read the subreddits, even on StockTwits, people are like, I bought at 250, I've been holding on, I've been waiting for this. So there are some people, when it gets to a certain level, they're going to cash out. They're like, okay, I learned my lesson. But at the same time, there's so many people that missed out on this because it got halted and they got in too late that I feel like they're going to want to, including myself. Like I wasn't investing in this at all. I just happened to get lucky and caught it, at $70 when it was on its way up. So I feel like there's some momentum at least for another day or two before it falls apart.
So what you could do is wait maybe a few hours to see whether or not the implied volatility on some of those options has kind of come back down to earth. And if it has, people are kind of less interested in that trade, I would definitely take a look at some downside protection if you're holding shares.
Sure.
Pick, what did you say the price was at? Like
we're at like 168, right now, yeah.
168. So take a look at the 200 strike price.
But the thing is, until tomorrow, it's just, none of this makes any sense because tomorrow this is going to open.
What's the implied volatility?
1,013%.
Jesus. Okay. Yeah. So my advice personally would be to not buy options in that case.
Yeah. I mean, we just talked about this. We just talked about this.
Failure.
And we said, stay away from high volatility. We just like our last episode, our yesterday's episode. So, it's true. But man, I think a call that expires like the 13th of March or a put, that expires the 13th of March. Because if you look at the historical situation here, and this is, once again, we're looking at, actually, let me go back to, this will be easy way. Looking at the month, this was a matter of maybe 5 days before everything just kind of tumbled back to earth. It didn't take long. Yeah. So getting a put out for that length of time, I think would make a lot of sense. But still, if there's nothing they can do to stop it, and Reddit, believe it or not, you couldn't access it on the computer, like on the browser, only through the app for a while, and for another while, couldn't access it at all. So I wonder if like people were stepping in to keep you from even getting on Reddit to keep pumping this thing up.
So I know this is going to increase the risk profile of the trade, but what you might want to consider doing is just day trading a call and a put.
Sure.
I mean, you'll spend less money. You'll be in and out quick. You'll be a little less exposed to what we call crush.
So like buy something
which is when implied volatility just gets crushed on me.
So buy something that's in the money, wait for it to go up, and then just sell it is essentially kind of what you're getting at?
What I would do is buy an in the money call and buy an in the money put.
Okay.
Sell the call when it goes up and then sell, because I think it's safe to say that GME is going to be trading in a wide range.
Sure.
For the next couple of days. We'll probably get
big time.
Some big swings.
100% it will.
And if you can pay attention to the market 24/7, go into the day trade.
Sure.
You know, because the implied volatility right now on that particular trade is 1,000, but if it goes to 1,200, which is, you know, could absolutely happen. That's definitely within the realm of possibility. If it goes to 1,200, you've just made a lot of money on that premium expansion.
Can I day trade?
Likewise, if it goes down a little bit, here's the thing. If it goes down a little bit, right, but the IV goes up, you still make money.
Sure.
Even though it went the opposite direction.
Can it go up
direction,
higher than 1,000 though?
You know?
Like 1,000 seems like as high as you're going to see. I mean, have you seen anything higher than 1,000?
It's a nice, no.
Oh, there you go.
I've seen it. I've never traded any contracts with IV that high, but I'm sure it's gotten that high. But here's the thing, like IV shouldn't be treated like a share price. You know, I don't think you should get wrapped up around big even numbers, personally, because it's determined. The IV is determined on a much wider, more complicated set of parameters.
Sure.
So what I would just do is, again, buy an in the money call, buy an in the money put with the expectation that you're going to day trade those.
Sure. It's good advice. Yeah. It's this. I would say it's definitely the safest way to go, for sure.
Yeah, because if you go out 2 weeks, you're just going to get crushed on premium.
Sure.
IV is going to drop.
Yeah. That makes sense. I mean,
then you're going to.
I think I'll do it, man.
You're going to be, you're going to be stuck holding that trade. You're going to have negative carry, and you know, negative carry is just what we all have to deal with, especially when you're trading options here and there. But you know, those options are going to be expensive because the IV is high, and you're going to be paying a lot more than you normally would had IV been lower. So, I mean, that's something to consider. You don't want that IV to be cut in half on you in a few days. So,
it's hard to believe it could stay at 1,000 for very long. So there's some actual.
What do you kind of lean towards, like deep down inside? What do you want to do right now?
Well, I'm going to sell it all at the bell. I mean, I'm just going to, because I'm not the only one who's going to do this. It happens every single time. I should have. I mean, maybe I sell and then buy that put right away, and then wait for it to drop and then buy the call. I mean, does that seem like? Because that's kind of what I was thinking. You know, definitely buy a call either way. The put, I was like, I feel like I would want to buy a long dated put, give it like a week, you know, and then when it starts to dip below 100, then sell it.
Yeah, that I think could work, and it's a good strategy.
Or just buy some stock.
You hold on. Yeah, but again, if you hold on to that put, you're going to get IV crushed.
Sure.
If you hold on to that put for like an entire week, my guess is you're going to get IV crushed.
And
who knows? Maybe not. Maybe this short squeeze continues its rampage, and you know, we see sky high prices going to next week. Definitely within the realm of possibility. That would be amazing.
For sure.
But I don't know, if something goes up 250% in a day, my expectation would be for price to, you know, at least come back down to the 20-period moving average. Like at least, you know, so show some sort of semblance of normality. Like take a 50% haircut. That would be a good buy-in. You know, then you have IV down, maybe not a corresponding amount, maybe not 50%, but it's going to be down a lot.
Sure. Judging from what happened last time, it would have gone up a lot more if they didn't trade, you know, and halt trading. But if it keeps going up and going up, people are going to, you know, Robinhood's going to hit its cap again. Like, I don't know how much more cap it got with the clearinghouse or whatever, but it could easily run into it again. So it's not like that's an impossibility. And they've already laid out the reason why they did it, whether people buy it or not. So they can just go ahead and do it, citing the same excuse or reason that they used as testimony, as a matter of fact. And AMC is kind of a very similar trajectory. This was the day. So trading around 5 or 6 and ended up around 11. So not nearly the same, but it's been kind of, doing its thing a little bit as well, which is kind of cool.
Yeah. And again, to hark back on the conversation we had about small caps the other show, AMC is the epitome of kind of an allocated business model.
Yeah.
That got really hard by COVID. I mean, who's going to movie theaters right now? Some people are, but how are they going to make money now?
Sure.
Like how are they going to transform their business to profit in the internet age?
Yeah.
I mean, they aren't a Netflix. They can't just jump into that space right now. It's crowded. So, I mean, my guess is they're going to be acquired by someone, or a miracle will happen and they'll just continue on as planned, as if nothing had happened.
Sure.
And that could happen. Eventually I could see people going back to movie theaters. But I don't know, like a lot of
I'm dying to go to the movies personally.
Social trends, I think, are firmly rooted right now. Okay.
I am. I'm dying
I think
to
a lot
go
of
to a
people have
movie.
kind of built. I think a lot of people have kind of built their lives now around this stay-at-home kind of lifestyle.
Yeah.
And I think, in spite of what people say, it's going to be hard for some people to kind of like adjust back.
And what's going to depend, I mean, we're really I guess it's poignant, but it's going to depend on what the companies that own the movies are going to do. Like HBO, Wonder Woman was released right on HBO, HBO Max, right? The Matrix 4 is going to be released on HBO. I mean, all these movies are just going straight to home, really. So, and all you got to do is have a subscription. So if they decide to do that, then it's going to really kill the movie theaters. It's going to be more of a niche thing. And they've been so overpriced for so long. So personally, I feel like it's about time we're getting to the point to where, so expensive, man. Like enough is enough. So I really feel like
so expensive.
What's going on?
I can't
with
pay
this?
$20 for large popcorn.
No.
I mean, I will.
Yeah.
Because
Popcorn and a soda.
you're going to drop $50.
Sure.
No matter what.
Yeah.
And soda. I mean, it just
forget about it.
I enjoy going to the movies too, Seth, but now that I have access to excellent programming, across all these different platforms, like I'm not very motivated right now.
I mean,
well, look at the share price.
We'll see how long it lasts. We'll see. I mean, it's gonna have its cute little run compared to what GameStop seems to be wanting to do, and I'm just once again I got lucky. I just happen to I look at the stuff that I follow all day long. Because I don't have other than the shows that I produce and everything, and of course spending time with my family, I don't have a whole lot else going on. And once again, I mean, those of you following the show, I use these accounts to kind of pay my bills. So I just happened to notice it going up, and I was like, okay, well, this is great. Let me jump on. Should have jumped in with more. Actually, I played it smart, but I'm excited to see how things going. And that's where we're going to go into a couple predictions. And let's go. Let's pull the VIX up, because the VIX was something that you kind of, you always kind of talk about and is your thing. And you had a prediction with what you thought it was going to do. So let's go ahead and pull it up. Let's see.
Yeah. So my prediction was that we were going to continue to kind of hold support, maybe get a slight bounce, and then head further down.
Sure.
And I mean, that's basically what we're doing. The VIX, again, I'll just reiterate, over the next 6 to 12 months, it's just going to get crushed. And I mean, that doesn't mean we can't have spikes. But again, if you look at the yearly chart, any spike is just sold down.
Yeah.
I mean,
pretty quickly.
We're in an uptrend.
Yeah.
We're in a very solid uptrend. And like, I'm sorry if you're long the VIX right now. I'm sure your trade will work out at one point.
So what is?
I mean, it's kind of an easy call to make in this market, to be fair.
Yeah, that's true.
I mean,
that's true.
But it isn't on the other hand, because psychologically, a lot of people are secretly bearish right now. A lot of people look at price and they say, we're just too high.
Yeah.
We're above all the moving averages. We need to come down and revisit, the 50 period, the 200 period. There needs to be a mean reversion. We need to have price come down to match fundamentals.
Sure.
That hasn't happened yet. The gap between price and fundamentals continues to just get wider, and that it doesn't make sense. It doesn't make sense to a lot of people. It doesn't make sense to a lot of technical analysts, analysts. It doesn't make sense to a lot of, retail traders, but, just stick with the trend. Again, we have quarterly expiry coming up, third Friday in March. That typically will give you some volatility. So we'll see what happens, but a lot of small caps, a lot of micro caps tend to be, that's where the action is right now. And there could be a knock-on effect whereby people getting busted out of their small cap trades, also end up getting busted out of like their big tech trades,
sure.
Right? Just because they say, all right, I lost a lot of money, I got to pull out right now, I'm going to be safe. So I'll sell Apple, I'll sell Tesla. And there you have your kind of knock-on effect. S&P goes down.
I thought about selling Tesla.
Less so than IWM, yeah.
I thought about it, but I'm gonna hold on. I mean, especially the stuff in my IRA, I'm just gonna keep it there. But I thought about it because I felt like there's other places to put it. All right, well, we usually end every show with what you're excited about. I'm excited, obviously, to see what happens with GameStop. What about you? Anything you're excited about?
Like I said, quarterly expiration is approaching.
Oh, and Watt earnings tomorrow. That's for sure.
Yeah. Okay. Watt earnings tomorrow. Absolutely. So that's what I'm looking at. I'm just looking at the VIX and seeing how it behaves and seeing if we continue just to grind lower going into expiration. So we'll see.
All right. Sounds good. All right. Well, once again, this is Market Peak, PEEK with Seth and Matt, and we will see you guys on Friday. Boom.